But July 28th, we get the numbers for GDP growth year over year for the second quarter. And if it's negative, which people are assuming it's going to be negative 2%. So there's like a 99.5% chance it's going to be negative. We are in a recession. The technical definition of a recession is 2 consecutive quarters with negative GDP growth.
Hurry up.
Hello humans, R Sabo. We're coming in with some more market news. What's going on? I'm going to give you guys even more evidence that we are in a bear market. Obviously keep in mind I'm not a financial advisor. This is not financial advice, it's for entertainment purposes. But hey, I'm a smart guy, I'll give you that. And this is good evidence. This is really good stuff right here. So today is July 21st, 2022. The Nasdaq is up 1.14%. The S&P 500 is up 0.65%, and the Dow Jones is up 0.15%. The tech stocks really got a big jump today from Tesla's earnings. Microsoft and Apple is coming up, and people are excited. And I'm going to tell you why they shouldn't be excited. Either way, I'm going to give you guys proof that, not proof, but hard evidence that we're going to be seeing red markets Monday. So, I mean, okay, we got the green markets. You guys are like, holy shit, I'm a bear. I want the market to go down. And you're thinking, like, why is this guy excited? Well, I mean, the VIX. So, like, look, the thing with the VIX is this is the volatility index. And when this goes down, it's usually a bearish signal. And it's pretty downward. I mean, so look over here. Wednesday, June 8th. It was at $23.96. And then we'll take a look at over here. June 8th. Let's look at it. Look what happened. When it's low, that's when it absolutely tanked. And it's getting lower and lower every day. The volatility index is getting lower and lower every single day. Tesla had their earnings yesterday. And my God. I mean, I didn't think they killed it. Like, they beat their estimates for EPS. Their revenue just slightly beat it, and some estimates they didn't even beat the revenue, but the stock price went up 10% today, which is, in my opinion, I could be wrong, but that's got to be overbought, and that's a gap in the charts that's got to be filled. I don't know. I thought it was a little bit weird, but either way. So next week, obviously, it is earnings season, and next week we have the 2 most important companies in the tech industry, in my opinion, Apple and Microsoft. So this Tesla earnings doesn't even matter compared to tech. We had Netflix as well, but those 2 don't even pale in comparison to Apple and Microsoft. Both $2 trillion companies in size, which is more money than you can even imagine. So this is a good sign that they're not going to do so well on their earnings, because look at this. Microsoft eases up on hiring as economic concerns hit more of the tech industry. So I want you guys to imagine you're a CEO for 1 second, okay? What would be a reason you would want to hire less people? Hiring people costs money. So why would you want to hire less? Because you're making less money. It's literally that simple. So this is a bad sign for their earnings report that's coming. I could see it trading down. I don't know. I could be wrong. One more thing. Apple is doing the same exact thing. Apple reportedly wants to slow down hiring in 2023. Guys, this is simple. It's right in front of you. I'm going to give you even more chart evidence right now to show you that the market's going to be red on Monday, and it's going to be even red for more days to come. But look at this. I'll show you the chart evidence, and then I'm going to talk to you guys about what the Federal Reserve, what's going on with them right now, and July 28th, why that's going to be a very big day, and that's going to confirm that we are in a recession. So, okay, right over here, we got this stock right here. So people are obviously really happy because this is what's happening right now. We're getting a lot of green, and people don't realize that we're still on a downtrend. I mean, look at this. This is approximately the past 6 to 8 months, something, I don't know. And look, this is the previous point of resistance. It has to break this to become an uptrend. So we need to see a lot more green. It needs to go like up here. And it had to fill these couple gaps over here. I mean, there was a gap right here. It had to be filled. It was filled now. There's and look, the RSI is completely overbought. I mean, so this RSI indicator right here, you guys can see, is at 62. 62. 80 means overbought, 20 means oversold. The last time, I want you guys to look over here. This dip we have over here. At that time, the RSI was at 65. 65, and look what happened. It hasn't hit that since. It has not hit 65 since. So if the market keeps going up, the RSI is only gonna go up with it. It's only a matter of time before it dips like it did back in April. And what's crazy about that is that was the earnings season for the first quarter, and that's actually what initiated the dip. Was Apple and Microsoft. Their earnings weren't even horrible, but the stocks got annihilated. They just got murked. Nothing, like, I don't know, it just happened, right? So there's that. And then the last thing, I think July 28th is a huge day, but I think July 27th is also a big day. July 26th and 27th, the Federal Reserve, the USA, will be having a meeting so the Federal Reserve of the USA will be having a meeting. They will be discussing federal or interest rate hikes. What are they going to hike the interest rates to slow down inflation? People are guessing 75. People were saying 100. Either way, whatever it's going to be, that's going to make the bond yields go up. That's going to make a lot of things, interest rates go up, and that's going to cause a lot of things to go down. So the spending can remain somewhat consistent, because people aren't going to want to spend money when interest rates are up, which also leads to stocks going down as well. But July 28th, we get the numbers for GDP growth year over year for the second quarter. And if it's negative, which people are assuming it's going to be negative 2%. So there's like a 99.5% chance it's going to be negative. We are in a recession. The technical definition of a recession is 2 consecutive quarters with negative GDP growth. In the first quarter of 2022, we had negative GDP growth. It was negative 1.6 or something, I think. I don't know. But either way, if we get it this next quarter, we're literally in a recession. Now, there's a difference between recession and market crash, but I think once the word recession is in the news, like, we are in a recession. It's not even like possible recession, potential recession. The news is going to say we are in a recession. I can't see that being positive for the markets. Obviously, like I said, none of this was financial. Oh, and for all those of you that live in Canada too, we just got our inflation numbers 8.1%. Also insane. This is not financial advice, guys. This is just showing to you that this is a fake rally. This is a fake rally leading to absolute disappointment for everyone buying in. I mean, everything I'm showing you guys are bearish signals. I have trouble finding bullish signals. I'm an open-minded person that looks for possibility and everything, and it's just hard. It's hard to find bullish signals nowadays. Anyways, you guys know how it is. It's real. Make sure you like, subscribe. You know how it is. I want you guys to like, subscribe, hit me with some constructive criticism, how I can make these videos better. Yeah, it's been real though. Peace.